Hello and good afternoon, everyone. Happy New Year and welcome to Gold Prime's webinar. Alex, your host today, and we have a guest speaker to share relevant and proven techniques that will help you navigate market volatility and the start of the year. So we hope you find today's session informative and insightful. So just a note before we begin, the sharing session will last for approximately 45 minutes. And after the sharing, we will make time for Q&A. So feel free to ask questions throughout the session on the Q&A part at the bottom of the screen. So I repeat, throughout the session, feel free to ask questions on the Q&A part at the bottom of your screen. Now, without further ado, let me introduce to you our speaker. He's no stranger to us. So just a bit about him. He was featured on Singapore's Channel News Asia for gaining 30,000 from just 500 dollars in just 2 years. He has won awards such as Most Popular FX Trainer in Asia Pacific and Top Forex Analyst by WikiFX. So his goal is to help others achieve financial mastery by empowering people to design the life that they want. So may I present to you Mr. Kar Yong. Over to you, Kar Yong.
All right, good afternoon, everyone. So thanks again for having me today. And of course, the opportunity to kind of connect with you guys and share about the topic, how to navigate the market, in such a volatile period, especially, what we've observed from the late last year going into this year, a lot of shifts in the fundamental policies as well from the Fed, right, or FOMC. Yeah, so as mentioned, I'll be sharing with you the content over here, and as we progress, if you have any questions, okay, do feel free to type it into the Q&A tab. I'll be able to look at those questions and answer them at the end of the session, right? We'll do our best to answer every questions that we're gonna get. Okay. So very, very quickly, right? What you see on the screen right now in terms of the PowerPoint slides, it's the SMC trading. Pretty sure some of you may have heard of this technique and methodology before. Smart money, right? Or some traders may call it ICT. At the end of the day, to me as a trader, I think the name is not so significant. At the end of the day, it's really about the methods, right? The approach that we use to look at the market and analyze and trade. Okay, so with a very volatile period ahead, okay, I don't think volatility is gonna slow down in the next 1 or 2 months. I think until we gain clarity in terms of like what the direction of the Fed and FOMC is gonna be, the market is gonna maintain volatility. Okay, from the topic on whether the cut rates, not to cut rate, is inflation coming back? Are we even gonna consider hiking rates? When the discussions of all these things are still on the table, the market can swing easily from one side to another within weeks, right? And as a trader, you need to have a way, a method to help you approach the market mechanically to a certain extent, right? And you don't want to be like swayed by the market. One day you're looking to buy, the next day you're looking to sell, then buy and sell. And you get confused, right? And you're gonna make mistakes. Okay. So the focus of today's topic is really to give you guys a technique, which is gonna be as mechanical as possible, so that when you look at the charts, when you look at the market, you gain some clarity in terms of like the direction to focus, what are some of the key areas. Okay, if the market is still respecting those levels, how are you gonna approach it? Even in the short term, there might be some volatility. Okay. So I'm going to use the technique on SMC over here to actually achieve that objective. Okay. So of course, SMC itself is a pretty wide topic. Okay. And it's not something that we can kind of like cover comprehensively within a session itself. But today's focus is to really drive in the foundation of this technique. Okay, and I always say, whenever I share, I always share with traders and say this, okay? Doesn't matter what strategy, doesn't matter what methodology you use, the foundation is important, okay? Because it can get very complex if your foundation is not strong. It's pointless. Okay, so I'll jump straight in, and then later on I'll go over to the live market environment to give you guys some actual real life example and analysis of the market too. Okay, so we'll start off with understanding structure. Okay, again, the term structure here can be used interchangeably. Some traders would also term it as, as simple as support and resistance, key levels, POI, point of interest, okay, swing points like swing high, swing low. All this term more or less mean the same thing. Okay, so to simplify things, we're just gonna term it structure. Okay, now there are some terminologies we're gonna walk through so that when we go over to chart later, when we talk about analysis, you guys are on the same page. We all understand what are the terms being used. Okay, so there's this term called order flow. Okay, I want you to bear with me as we progress because some term might be very, very new to some of you. Some terms you might heard of it if you've experienced and explored SMC before. As we progress, if you still don't get it, just put your question in, and then we'll go into the Q&A segment later on. Okay. Now, order flow. What is order flow? Okay. Order flow is basically an external swing points of the market. Now, today, if you have a little bit of experience in the market, you might come across methods or terminologies where traders say, you want to look at the higher time frame and then go down to lower time frame, or you heard of this thing called the multi-time frame analysis, right? MTF. So in SMC perspective, the similar principle behind it is looking at order flow, external structure, and internal structure. To break it down to simpler understanding is basically looking at the market in a multiple time frame perspective, right? From a big picture perspective, and then you zoom in. So when we talk about order flow, when we talk about external structure, we are talking about the big picture, right? So big picture, high time frame, low time frame is kind of relative. Really depends on, are you looking at daily as your higher time frame, or are you looking at maybe hourly as your higher time frame, right? So this is something personal choice, personal trader's preference. From my experience, I wouldn't advise someone to be looking at too big a time frame because then trading becomes irrelevant. And if today are fairly new, right, you don't like to kind of like look at the markets too many times, too long, in a single period of time, then you want a good balance, right? So for me, 4 hour is essentially my external structure, my higher time frame, and then H1 becomes my inner structure, my internal time frame. Okay, so you want to define for yourself. Okay, if today you're more of a short-term trader, maybe the H1 becomes your external structure, your higher time frame. Okay, and then 15-minute becomes your internal structure, your intraday lower time frame. Okay, so that's how you define order flow. That's how you define external, right? Big picture perspective. Okay, so again, the idea here is very simple principle. Today, let me annotate if I can. All right. So today over here, right, you can take any time frame as I mentioned. Okay, so you need to define that for yourself. Like for me, external structure here refers to H4, right? That's how I use it. Okay. Mark out the external structure. If the price is making lower low, lower high, it means you are in a bearish structure. If the market is vice versa, making higher highs, higher lows, that obviously is going up. It's a bullish market structure, right? So this one here, nothing too fancy, nothing too complex. If the market is basically coming down, retrace, coming down, lower low, lower high, that's a bearish market structure, right? And then of course, if the market is going up, higher high, higher low, that's a bullish market structure. Okay, so very, very straightforward, very simple. Okay, so I think this one here, as traders who have a little bit of experience, no problem. Okay, so of course the opposite scenario is true. Okay, now why is this important? Okay, because understanding the overall order flow on the higher time frame gives you what we call a directional bias, right? Especially in a very, very volatile period of time. You need to have what we call a clear directional bias. Now, directional bias here doesn't necessarily mean, oh, if it's bullish, you're going to just keep buying. right? Directional bias, the definition to help us as traders is being focused in a particular direction. So if you are a bullish bias, I'm not so interested in selling. I'm more interested in looking out for opportunities to buy. Okay. Now, whether I'm going to be executing a buy trade, that's on the lower time frame. But at least on a higher time frame, what I want to define first is, do I want to focus on buy opportunities or do I want to focus on sell? Or I may not have a clear bias. Okay. So today, if you open up a chart and you realize that, oh, the market is basically not forming lower low, lower high. Okay, basically in a range bar environment, you are in a neutral bias. Okay, in other words, no clear order flow. You don't want to trade that particular instrument. All right. Now I'm gonna kind of switch a little bit between the slides and the chart so that everyone can, follow through as well. Okay. So very, very quickly, I'll just bring up, right? It can be any chart. I'll just pull out some charts that are more obvious to show you the example. Okay. Now this is a dollar index chart, DXY. It's on the 4-hour time frame, right? So that's my external structure. Okay. Now I'm not too keen to really look too far back. What I'm more interested is, where is the current market price? Okay, where is it in relation to the recent development? So the current market price is here. We have a low here. Before this low, the market actually came from this top. Okay. Now, how did it came down? It went down. It went up a little bit, retraced. It went down. It went up a little bit. It went down. And then right now it's coming up. Can follow this, right? So far, so good. So what kind of market structure are we in with price currently at this point? Okay. So you can see we have this high, we have this low, we have this high, we have this low, we have this high, we have this low. Basically, right now we have this high. So we are technically, you can see very, very clear. Lower low, lower high, lower low, lower high. So we are right now in a bearish market structure. Okay, so what does it mean? Okay, it means that today we're gonna continue to look out for sell opportunity. It doesn't mean that we're gonna sell it now. It just means that overall, we're gonna maintain a bearish point of view until we are proven otherwise. Okay. So bearish market structure, you need to be clear in defining your swing highs and low. Okay. So this is my swing high. Okay. Now at that point in time when the market was here, that's my swing low. Okay. And then the market retraces and it comes lower, forming a new low. This point becomes my swing high. This point became my swing low. It retraces and it went lower. This becomes my swing high. This becomes my swing low. Can follow through, right? Very, very mechanical. Okay. Now, until price actually break above this swing high, we are still in a bearish market state because we have lower low, lower high. Can follow, right? So until this is broken, we're gonna be bearish bias. Okay, very, very clear cut. Now, if I go back a little bit to give you a little bit more example. Okay, so what the market did previously was it went up, it came down, it went up. Right? So we have a higher high, we have a higher low. We're in a bullish state, the market pulled back, the market went up, the market pulled back, the market went up. All the way until this point, we have a higher high, higher low. Okay, which means that this entire state of the market is a bullish market structure. Now, at what point in time did we get a bearish market structure in terms of order flow? When the price actually takes out this low. Okay, so this was a previous swing low. The market came down, close below that. So at this point in time, it's proven that previous upside, previous bullish market structure has shifted to a bearish one. Right? So that's the idea behind external structure. Okay. Now I'm going to show you some examples where things are just not clear. Okay, look at this. The market forms a high, it came down, forms a low, went up, forms a high, came down, forms a low, went up, forms a high. Right? Essentially, what's the market doing? It's forming highs and lows but it's not really breaking with conviction, right? You kind of have a little bit of a thick break, right? You can see here it pokes up a little bit, it pokes down a little bit, but then it doesn't continue, okay? So this kind of market structure is what we call a range bound environment. Your bias is simply remain neutral, okay? You don't want to be trading during this kind of structure, okay? So as a trader, what you want to do is you want to find out a market that is giving you a clear directional bias, okay? And how we do that, we use market structure, we use order flow, okay? So again, some PowerPoint examples over here you can see. All right, low, high, low, high, low, high, right? So this is a bullish order flow. Okay. Then this is a bearish one, right? As the market is coming down, it's forming lower low, lower high. Good, can follow. Now, with external, it obviously will come with an internal structure, right? This is where multi-time frame plays in. Now, if you have a little bit of experience, sometimes within the same time frame, you're able to identify both the external and internal. Okay. Now, what I mean by this is we'll go through, okay, and then I'll show you an example of a chart. Now, the term here we use for internal structure is called trend. Okay, again, I'm not too particular with the naming. You can give it any name. Just be very clear on the principles behind it. Right? So external structure we call it order flow. Internal structure we call it trend. These are just very common terminologies that SMC traders use, but give it your own name, right? As long as you're clear on what you're referring to. Okay, so trend is basically the inner swing, which is a smaller time frame, okay, to give you an understanding like, do we get an alignment between the higher and the lower time frame, or do we get an opposite direction within the lower time frame and the upper time frame, right? So that's why we have this multi-time frame understanding. We have this internal and external. Okay. So if price, again, same concept, right? If price is making a high, 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 low, then obviously the inner time frame here is bullish. The opposite is true. Okay. If you're looking at lower low, lower high, lower low, lower high, then on the lower time frame, the trend is bearish. Okay. Now, same thing here, right? We have this as an order flow. Okay. And within the order flow, okay, within the order flow, this is a bullish trend. Within the order flow, this is a bearish trend. Okay, this here is also a bearish trend, right? Which means that internally, you'll be able to see lower low, lower high, lower low, lower high, lower low. So on the lower time frame, this here is a bearish structure, right? It's a bearish trend. Over here, higher high, higher low, higher high, higher low, higher high, higher low. This is a bullish trend. Okay. The overall market structure, the external point of view is up, but the smaller time frame when it's pulling back is going to be bearish. Now, this might sound a little bit confusing. That's why I want to give you the understanding of multi-time frame principle. Okay. So hopefully so far, so good. Okay. Sorry, let me clear my drawing. Okay. All right. So that's a bullish trend, that's a bearish trend within a bullish order flow. Okay, same thing. When the market is coming down, we would have a bearish trend, and then the pullback is basically just a bullish trend. Okay. Now, this here, this simple principle is going to help you gain clarity when you're understanding and looking at the market, because today, okay, I'll go and bring you to the chart again, right? Today, the dollar index, as we have explained just now, is in a bearish structure, but it's currently pulling back. Okay, so what does it tell you? It means that right now, H4 directional bias is bearish. However, on the lower time frame, the market is bullish. Okay, so when your higher time frame is bearish, your lower time frame is opposite, is bullish, they're conflicting. It means that the current state of market is doing a correction, is doing a pullback. Okay, now at some point in time, if the whole direction is going to align itself, the H1 would start coming down. Okay, and when that transit into a bearish state, then this is what we call an alignment, right? Where you have H4 bearish, H1 also bearish. Right. Now, up to this point in time is really, I want you to remember is the objective here is to define what direction to focus, what the market is currently doing at this stage. Okay, we are not talking about execution yet. You're not talking about, oh, should I sell now? Should I sell here? No, we're not talking about that at this moment, right? We're talking about how to define clarity from the market. Okay, so that's the idea behind it. Let me give you some example, right? Concrete ones. Take a look at GBP USD. All right, so where the market is, it's here. How did the market came up? It was here. Okay, so from this low to this high, we can start to see the market move up, came down, move up, did a little bit of a move down, came back up. Okay, this is very, very obvious. We're having a bullish market structure. The market is forming higher highs, higher low. Now, previously it was coming down, right? But that was that. Because right now we get a higher high, higher low. Okay, we get swing highs and swing lows going up. So H4, okay, is in the bullish structure, right? Or we call it bullish bias. Okay, which means today, if I'm more conservative, I want to be trading with the overall direction. I will only want to be looking at buy. Okay, to follow this thought process, right? Because we're in a bullish structure. However, in the near term, as the market starts to maybe do a little bit of pullback, right? It can actually form a lower low, lower high, lower low, lower high, right? As it continues to pull back. Okay, because the market will not, trend all the time. It will do a certain pullback. So this one here, as it continues to develop like that, will end up, will end up having H1 bearish trend. Okay, or you can call it a H1 pullback. Okay. So when you understand and you apply this principle, you gain clarity in knowing, okay, H4 is bullish, H1 is just pullback. Meaning today, if you're going to sell it, I'm trading the smaller time frame, right? If I want to sell it, I'm trading the pullback. If today I don't want to sell it, I only want to focus on buy, I need to wait for my lower time frame to realign with my higher time frame, right? I need to make sure my H1 starts to turn bullish. Then that's a realignment. Meaning my lower time frame and H4, my lower and higher time frame, both similar direction. Okay, so that's the clarity you want to gain. Okay, now I also show you some example. Okay, let's take this. Okay. Now H4. Okay, so H4 over here, again, doesn't matter which instrument. This is very, very clear bullish market structure, right? You have lower low. Sorry, you have a higher high, higher low. Can see that, right? Even right now. So this is obviously a bullish market structure. Now on the lower time frame, you can see the internal within this move here. They are also high, 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 low. Okay, so this is what we call realignment. Okay, where you have your H4 and then your H1, which is the smaller piece here, both telling you upside. So today, if you are a true trend follower, okay, that means you are more, your preference here is to really follow the big picture perspective, the big picture direction, then this is a classic example where you want to look for buy. Okay, today, if you are more of a contrarian, you're looking at, okay, I don't mind going counter trend in the near term, in the short term, I don't mind going counter trend, then, this is a good example of selling it, right? Because the higher time frame is up, but you understand right now the market may be pulling back. Okay, that opens up a short-term opportunity. Okay, so simple principle like structure, when we start to break it down into higher time frame and lower time frame, external and internal, it helps you to understand, at least mechanically, what the market state is, what is the directional bias to be focusing on. Okay, hope so far so good. You guys are following through. Okay, this is very, very important, yeah? Because this is, again, the building blocks, the foundation of SMC, right? Now, I went a little bit ahead of the PowerPoint when we talk about fractal alignment, okay? So we kind of just now explain a little bit, right? Today, if we have an external, we have an internal, we have an order flow, we have a trend, okay? And when two things are in the same direction, that's what we call fractal alignment, okay? So order flow is the external, trend is the internal. The internal would make up the external, right? What this essentially means is, think of it as a building block, right? What is going to make the higher time frame, what will establish the higher time frame, always starts with the smaller time frame. Okay, if the smaller time frame is not going up, the higher time frame will not go up. If the lower time frame is coming down, okay, the higher time frame cannot go up as well. Okay, so this is basically what it means. Okay, so oftentimes there's a misunderstanding or misinterpretation where traders would say higher time frame is more important than lower time frame. Okay, from the understanding of multi-time frame, there isn't really like which is more important. Essentially, they're just telling you pieces of the market, right? There's no like which one is more important, because lower time frame will build up the higher time frame. Higher time frame will have less noise. That's about it. Okay, so I just want you to be very clear on all these things. Now, we can better understand both sides of it when we assess, them in relation, right? So as I mentioned again, if today the higher time frame is bullish, and then on the lower time frame the internal structure we are looking at bearish, we know that it's a pullback, right? So that's where the multi-time frame comes in. Okay. So again, these are just words to kind of explain what I've just covered just now, right? In PowerPoint right here, right? So if order flow is bearish, but the current trend is going up, right? It's telling you that it's pulling back. Okay, so again, just to reiterate, if the bigger order flow is bearish and we have an inner trend that is coming up, that's a pullback. Can see that, right? So we are bearish in the market structure. The internal here is bullish. This is a pullback. Can follow, right? Good. Okay, so this part here again is a bit lengthy. Basically what it means again, okay, is today you as a trader, you can look at counter trend as a short-term trade, or what you can do is you can wait for price, okay, to realign at a certain key area, then you look to trade in the bigger picture direction. Okay, so the idea here is again, we see this often after we put in a new low or high, the market tends to pull back. Okay, so going back to the chart. Today, if you see market is putting a new high, there's a high chance the market will start to pull back. Okay, so there are some overlap with other principles and methodology, such as Elliott wave as well. But essentially, the idea behind it is every time you see the market break out, forming new highs or lows, always expect at some point in time the pullback will occur. Okay, so you can see this, right? Breakout, pullback occur. Breakout, pullback occur. Okay, breakout, pullback occur, breakout, pullback occur. So would this likely have a pullback? Higher odds it will. Okay, so the idea behind it is today, if you're in a bullish external market, when we just break out of the previous swing high, expect a pullback. Okay, how do we know the pullback is more or less completed? When the inner structure starts to realign with the higher time frame. Okay, so you can see here, right? Lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then at one point in time, we cross back up above this high. At this point in time, this is where we have a realignment. Higher time frame, bullish. Lower time frame from bearish turns bullish. Okay, this part is where we get realignment. POI for you to trade to the upside. Okay, so very, very simple principle, but useful. Yeah. Give you an example on this, okay? Bullish order flow. Okay, why bullish? Okay, this was coming down. This is the low. This is the high. We got a break. Okay, even internally here, we got a break. So it's basically a bullish order flow. Okay, we have a bearish trend. We have a fractal realignment over here, right? So just now I kind of explained to you in drawing, right? This is more like an example in the chart. This is coming down, right? We have a bullish order flow. Higher time frame is up. Okay, lower time frame is coming down. And then this is where the internal realignment occurs. Okay, just now I drew this, right? Bullish structure, coming down, coming down, coming down, and then realignment. Okay, so this part here is this part. Okay, this part here is this part. Can you see that? Oh. So what it means to you as a trader is today you have identified if your H4, your high time frame is bullish. When you have a pullback, that's telling you be ready, right? Because once the pullback is completed, when you get a realignment, that's your opportunity to be buying up. Okay, so that's what we meant by multi-time frame analysis, right? When you have a realignment, that's the highest probability trade you can look out for. Okay, so opposite is true, right? Today you have a bearish market structure. The internal is bullish because it's a pullback, and then this is your fractal realignment. Okay, I'll give you some example that recently occurred as well. Okay, look at this. Okay, what do we have on the bigger scheme of things? All right, we have a bearish move. This is where that swing high is. This is where your swing low is. The market pulls back. Okay, internally, bullish trend. Okay, at which point it starts turning bearish? Where is the realignment? When we have this broken. Okay, because swing low, swing low, swing low, broken. Bigger market structure is bearish. So at this point in time, this is your realignment. So this pullback here gave you an opportunity to sell it because why? The overall market structure is bearish. Okay, give you another example. Okay. Now, suppose we look at GBP USD again. Okay. Now, let's say we have this low, this high, this low, this high. Now, if the market internally starts to do this, okay, visualize a little bit, and then at some point in time, it decides to do this. Okay, that's a realignment. Okay, and then this is where your opportunity to buy occurs. Okay, because the market structure here is bullish. Can follow? Now, this is the simplest kind of understanding. Of course, the more advanced part is, can you trade a pullback? Yes. Okay. Today we may not have the time to really go into the details of what we call a setup. Okay. But at least the objective today I want everyone to be able to do is the bias, right? Which is understanding what direction to focus on. Because today, if you don't have this, having a setup is pointless, right? Because you don't want to be trading every setup. You only want to trade high probability setup. How do you know it's a high probability setup? When you have a clear direction, when you have a clear point of interest, key areas. Okay. So that's very important. Yeah, hopefully it's clear. Okay. Now, I'll go into a little bit more details for structure first, right? I don't want to over confuse everyone with like the setups and things like that. Okay, so we really want to establish a very strong foundation, at least for today's sharing. Okay, so that you walk away having the confidence to define whether is it a bullish market structure or a bearish one. Now, there's this term called break of structure, right? In short, BOS, right? It's a very, very common term in SMC. The simplest understanding of it is basically break and close. Okay, the keyword is break and close above certain points, right? Above certain swing highs or swing lows, right? I would even add on the element of you don't want to just have a candle break and close a little bit. You want a momentum candle to really give you a clean break and close. Okay, let me find examples to show you. Okay. Now, okay, look at this here. This is a low. That's a break with momentum. Can see that? Okay, let me zoom in a bit more. Okay, this is a low. This low is broken with momentum. That's a clean break and close. Okay, that's important. Now, I'll give you an example of this here. Okay, I'll play forward one chart. Look at this. Technically, if you define this as a low, that's a break and close. But this break and close is without momentum at that point in time. I will not consider it as a strong break of structure. Okay, that's something I personally add on to make it very clear, because for SMC traders, they would say, oh, that's a break and close. Okay, that's a BOS. But to me, that's not a break of structure because this candle is not with momentum. Okay, this here is a very clear break and close. Okay, so that's a little fine details that I think is very important. Okay, so that's what break of structure really means, right? So if I show you in a chart, you can see over here, this is a swing high. This is a low, the market break above with momentum. Okay, now this one is not a very clean break, it's not very strong momentum, but it follows through. So, you know, at this point in time, you know, okay, that's a break of structure. Okay, this one is also a big candle, very clean break of structure. Okay, so that's what BOS really means. The opposite is true. Okay, now, how do we define swing highs and low? Okay, this is also very important. Now, you first start off with picking a very obvious high. In this case, is here. Can see that, right? Because there's no other highs from there. That's a very obvious high. The market came down, it pulled back. Okay, we won't know this is the pullback until we get a break of structure. Okay, maybe I'll bring you to the chart to illustrate. It's a little bit easier, yeah. Okay, let me do a little bit of a replay. Okay, now suppose this was what we are looking at back then. Okay, so we have certain very clear points, right? This is like the lowest point as of now. Okay, we'll do this as a swing low. The market went up, came down, went up, right? So this is what we call a clean break of structure. Okay, we'll do a little bit of label here. Okay, now once we get a clean break of structure, then we know, okay, this is actually the lowest point of the retracement, right? Because after this break, then only we can define, oh, the low has been established, right? Now, after a break of structure, the lowest point prior to the break of structure will form a new swing low. Can follow? So the market went up. At this point in time, it's here. We won't know this is a swing high until the market gives us a very obvious pullback. Okay, so sometimes you just need to give time to the market, right? So the market continue to develop. It did a pretty significant pullback. So what we can then now do is define this as our swing high. Okay, so what do we have up to this stage? We have a break of structure, we have swing low, we have swing high. This is a bullish market order flow. But right now it's pulling back. The internal trend is bearish. It's still in a pullback phase. Okay, so as the market continue to develop, okay, at this point in time, it's still the same. Nothing has shifted because we don't have a new break. We didn't break below that. So the market is still in a bullish market structure. And that's about it, right? The market continues to develop. Nothing has shifted. Okay, all the way until here. What do we get? Break of structure with momentum. So this swing high is done, right? This swing high gets broken, it becomes a BOS. Okay. So once it break out, where is the lowest point prior to the break above this low? So that low will now become our new swing low. Okay, then this is irrelevant, right? We don't have a swing high yet because we haven't get a significant pullback. Okay, so what we have at this moment, we have a break of structure, we have a swing low here. Can follow, right? Okay, then the market continue to develop. Oh, we got a pullback. Now we know this can be our swing high. Okay, then how the market continue to develop, it pulls back, nothing has shift. It's still overall in the bullish market order flow. And continue to develop. Okay, we get a break, but not really with momentum. I'll observe it a little bit while. Okay, so it did break and go a little bit above. Okay, what I'll do is I'll then change this to break of structure, right? Because it went up a little bit. Now, this individual candle here, it's not a break of, oops. This candle is not a break of structure. But because it went further up, that's a clear break and close above. Okay, so I'll do a little bit quicker. This will be my new swing low. The market is pulling back. We have our swing high. Can follow, right? That's a very, very methodological and mechanical way of defining structure. So we get a pullback, pullback. The internal structure here is bearish. Okay, the market order flow is still bullish until, okay, until the swing low gets broken. See that? Okay. So now from a bullish order flow, we get a break of a previous swing low. The direction shift. Okay, the direction shift from initially bullish, now bearish. The internal of it, okay, the internal you can see, right? Come down, goes up, come down, go up, come down. So these are all your internal structure. Can I follow that thought process? Now, internal structure means lower time frame. Today, if I go down to the H1, what do we have? Okay, same principle. This is a H1 break of structure. That's your H1 swing high. Okay, the market came down, pull back, break of structure again. Your swing high shifts. And follow, right? So this is what we have at this point in time. So far, so good, right? So what does it mean? It means that at this point in time, what we're seeing here is both the lower time frame and the H4 bearish. Okay, that's a realignment. Yeah, hope that's clear so far. Okay, so up to this point in time, right? So this is where we are based on what we have. Oops, based on what we have analyzed. Okay, high time frame as of this chart, bearish. Inner time frame also bearish, right? But this is in a pullback state. Until this high is taken out, we are technically still looking for downside. Okay, good. Hopefully so far you guys are all very clear in terms of defining structure, order flow, what is BOS. Okay, I'll take a quick look at some of the questions over here. Okay, to answer them, yeah, we do have a little bit more time here. So, if you have any new questions or any additional questions, feel free to put it in the Q&A, or I'll take a look at answer them. Great. Fatiha here says, always heard about SMC, but never really learned about it. Hopefully today you gain some basic foundations of it. Okay, Kar here says, if the BOS, if the break of structure, we can wait for retracement and open position, or how do we open a position? Okay, good question. You want to have a setup. Okay, before you execute a trade, you need to have a setup. Now, for SMC itself, a setup typically look something like that. There are some elements that go behind it, right? We want to see a liquidity sweep. We want to see a change of character. Then we wait for the pullback and then we sell it, right? This is a sell setup. Okay. So you have some element that we haven't really gone through today. But I'll just roughly draw it out so you can see. This is your entry point. Okay. So your sell setup looks something like that. You need to have a little bit of a big break, okay, a reverse, and then a pullback, right? If today you're looking to buy, your buy setup looks something like that. Okay, so a fake break, a reversal, a pullback, then you buy it here. That's your buy setup. Okay, there are some details you want to go in. Today we might not have the time to really go into that. I'll just show you very, very quickly how it looks like on some of the previous examples of a setup. Okay. Let me just show you charts. Okay. Okay, good. This is one example. Okay, so just now I've kind of highlighted, right? You want to have a little bit of a fake break, okay, a reversal, and then a pullback. Okay, this area is where you look for that buy. Okay, so that's your setup to buy, right? This is a buy trade setup. Okay, now you don't want to just buy every time a setup forms, right? You want to have higher time frame alignment. You want to make sure that this entire setup is at a key area on the higher time frame, right? This is H1, right? So the H4 analysis is also very, very important. Now, once you have that, okay, this becomes a pretty decent buy, right? So you can see tag in, straight away move towards the upside, right? We haven't really go into all the details of this. I don't think today we have the time to do it, okay? But I just want to show you some setups, right? Similar here. Okay, different instrument, same setup, right? We have a fake break, we have a reversal, the market is pulling back. That's your setup. Okay, now doesn't mean all the time is gonna work, right? I'm just want to be very transparent with you. Some setups it's not gonna work out. Okay, trading is not 100%, right? So this one here you can see the setup, but this trade is a losing one, but it's fine. Some trades you win, some trades you lose. More importantly, your risk to reward ratio is positive. If you win 2 trades, you lose 1 trade, then that you're still gonna win that trade. Okay, so that's the setup. Okay, I might not have the time to go into the details of every part of a setup. The focus on today is still very much on structure. Okay, but just want to highlight on what it means by after the structure, after you have a clear direction, you move to the next phase in trading, which is setup. Okay, so I hope that's clear. Cairo here asks if price all-time high, how to analyze price will stop and come to a near support. Okay. Now, so the thing here is of course like gold, right? This how I put it is this is a clean break, right? That's a break of structure. So where's your lowest point before the break of structure is here, right? So that's your swing low. Okay. Now what you want to do is obviously you don't want to be buying here. Okay. You want to buy, you always wait for the price to pull back, then you buy because your risk to reward ratio will be better. Okay. You have a lower risk, you have a higher profit potential. Okay. If you're gonna buy at the top, then your risk is so wide, your target is just not gonna make sense. Okay. So you always want to wait for a pullback. Okay. Now, obviously, there are some elements to understand as well. Today, we might not have the time to go through everything. In SMC, we have this thing called order block or point of interest key areas, right? So most of the time, the market would eventually do some sort of a pullback towards your point of interest. That's where you look for your setup, and then you enter that trade based on that setup. Okay. So if you take a look, this little part here is your setup. When the setup enter into our key area, that's where we take that trade. Can follow, right? Okay. So your trade would typically look something like that. Okay. Obviously, depending on how far you want to aim your target, you can aim here, you can aim here, up to individual. Okay. But that's the gist of it. Okay. Now you wouldn't know when it's going to pull back. But the thing is, you're not so interested in this phase. You're more interested when after it pulls back, you get a realignment on the upside. Okay, why? Because this one here, internal, is bearish, 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 shift back to bullish. We are in a bullish market structure, right? This shift is a realignment. That's your opportunity to be looking at a buy trade. Okay. Good. So hopefully that's clear. Another question I see is how can we differentiate between a true break and a liquidity grab? Good question. Okay. That's why I added on the element, right? Today, if you look at this break here, right? You look at this, right? The market did close and break below that, right? But how did it break? It just break and then that's it. But if today there's bearish candle here, that's a BOS. But you realize that after it breaks, that's it, it reverses. That to me is a liquidity grab. Okay, so the part here is you need to give time for the market. Okay, you don't rush things through sometimes, right? So like, for example, we go back in time, right? Is this a break or is this a liquidity grab? At this point in time, we don't know. But what we can do is we give it time, give it another candle. Oh, it's not a continuation to the upside. Be very, very careful. Is this going to be a liquidity grab? Maybe. Again, give it time. Next candle. Still there, not much information. Next candle went up. Now it becomes very clear. This is a BOS. Okay, can follow, right? Sometimes you just give the market time. Now, if that's a break of structure, that's your swing low. What market we are in? We're in a bullish market state. Okay, so the thing here is when you're not clear, sometimes just give the market a little bit more time, things will get clearer. And follow, right? Okay, so that's how we differentiate that. Okay. Good. Okay, so I see here Firdaus asks, what should I search for setup? I kind of explained just now, what I'm looking out for in terms of the setup, right? If you want to buy, you want to have a liquidity grab, a shift, a pullback, that's your buy. Okay. This is a very, very typical SMC setup itself, right? Where you have elements of liquidity grab, you have elements of change of character, break of structure, basically a reversal, and you wait for a pullback to enter. Okay. Yeah. Minka here says, yep, you learn more about SMC. Yeah. It's actually a very, very mechanical system, right? So that's something great. Can we open position order block? The answer is yes, right? Again, the basic model is this, right? The basic model is this. Where you enter here, some traders use fair value gap, some traders use order block, some traders use Fibonacci. You can combine a couple of things. Yeah. At the end of the day, it's about probability. It's not about perfection, right? It's more of like, this is a simple model. How do you find confluence in this area? Up to you, right? You can add order block, you can add fair value gap, you can add Fibonacci. You can even add other methods like Elliott wave into it, right? Yeah, so that works. Okay. Which trading session are most effective for identifying the smart money movements? Naturally, it's going to be UK and the US session, right? So in Malaysia time zone, that's like afternoon 4 p.m. onwards until maybe around 11 p.m., 12 midnight. That's your UK to US period. Strategy always important, not trend. I would put it this way, right? My approach to trading is always about direction, setup, and context. Okay. To me, strategy falls under setup here, right? So to me, what I mean by setup is like, what are the criteria, what are the methods that you need to enter a trade, right? So that to me is a strategy. Okay. Today, what we cover a lot here is direction, right? So you can actually understand direction by using structure. You can understand direction by wave. You can understand direction by fundamentals, right? So basically every approach when you're doing a trade, you need to have a direction, you need to have a setup, you need to have context behind that. Okay. So strategy is important because that gives you the setup. trend is also important because trend gives you the direction, right? So they're both important. Right? Azizan asked, can we put fibs between swing low and high? Yes, I do that. Okay, I put fibs. Okay. So I use a lot of Fibonacci, and then I combine various techniques together, like SMC, I combine it, Elliott wave, I combine it, right? Fibonacci, I also use it. Okay, so yeah, definitely you can do that. Amelia asks, can the next session we learn about confluence setup? Yeah, I mean, we can design something in the future, okay, where the next session I'll talk a little bit more about setups from SMC perspective, if that's something you want. Okay, good, right? So if that's all, I'll maybe very quickly pass the time back to the moderator, okay, to wrap up the session before we kind of conclude it. Okay, so over to you.
All right, thank you so much, Kar Yong, and thank you to all of you. I hope we have addressed all your questions and concerns well. But if you have any other questions in the future, you can always reach out to us via our live chat through the Bull Prime website. And good news to the first 30 participants, you have signed up, you have attended today's sessions. You are about to receive a $15 bonus in your trading account within 24 hours. So that concludes our webinar today. And thank you so much again. And thank you to all of you for spending your Friday evening with us. And remember to trade smart with Bull Prime. Thanks. And enjoy your weekend. Happy New Year, everyone.